All right, so let's talk about a couple pet peeves around cash flow. I don't know if pet peeves. I think things that we want to shine a light on.
Okay.
Right? You like to rail against the idea that people are just obsessed with this cash flow number.
Yeah.
Why does that really yank your crank, GC?
Well, when I think about why it yanks my crank, I just think that there's a double standard here. And I constantly am just bombarded with just examples of this double standard. I just sent something out on our Facebook group talking about how there was a recent study done based on stock fund managers. And what they uncovered is that something I had never thought of, but when a stock prospectus and a fund portfolio prospectus, you show your performance of your fund versus something that you're comparing it to, a section of the market that you're comparing it to. And so this study was done, and it showed that 30% of fund managers, when they were underperforming, they didn't continue to show their underperformance in their prospectus. They just changed the section of the market that they were comparing it to. And this is totally legal. And so I'm like, maybe I'm jaded, right? But I just see so many things that are done largely in the stock market world, in stocks and bonds, that are accepted, and people are encouraged to invest knowing these things, and they're just like swept under the rug, or it's just not a big deal. But then there's one little thing in rental properties, and people are like, oh, well, hey, no, I'm definitely not. You'd be crazy to invest in rental properties. You think I'm going to do that? No way. No, I'm going to go put it in the stock market, where fund managers change the rules all the time. And, cash flow is one of the biggest gripes that I hear about why you shouldn't be investing in rental properties. And the first question I ask people is, are you getting cash flow in the stock market? Like, talk to me about the cash flow you're getting in the stock market, right? Almost no stocks provide dividends. There are some that provide dividends, which is the same as positive cash flow or net rental income. But I tell you what, they are not getting rich based on the dividends that they might get. They might be 1% dividends or 2% dividends. Like, it's not helping them reach their financial goals, even if they get a dividend, which is really, really rare. And so I'm just kind of tired of everybody saying, listen, I'm not going to invest in rental properties because of this reason. And I'm not tired because it might be a valid reason. I love those conversations, but I'm tired if that's the same reason that they then say that the stock market is better, then they go and put their money in the stock market, because I think ultimately they're losing. I think that as a nation, we are way over invested in the stock market. We lack diversification. And at the end of the day, if you invest in rental properties, it's proven cycle after cycle that it performs better than the stock market. If you understand how to use smart debt, it performs better than the stock market, and it has less risk. I mean, we just went through the pandemic. When the pandemic hit in March of 2020, the stock market dropped 30%, like in a week. It really hurt people. People were freaked out. For that, ever since the pandemic hit, we have collected 98% of rents and rental properties. And it's not just because I love my team here at JWB. I'm also talking about rental properties as an asset class, as an investing space. We have performed very consistently. So I think it's a lower risk, and I think that it is better returns. And I'm just tired of all the excuses that people don't hold the stock market accountable to. And there you go. That yanks my crank.
This man's crank has been yanked. Yeah, it's interesting to think about it, right? I've had my discussions with my wife and being in this asset class and going on the journey and having the short-term pains of like a bill here and a bill there and whatnot. It does strike me that, right, I have to assume that the majority of America is just in their 401k and the IRA, and they just don't even think about it, right? It's just like, put it in the stock market. To your point, they're not there for the cash in the stock market. They're there for the appreciation.
Right.
They're there for the growth of the market, AKA the appreciation of the price of the stock, which is 1-to-1 appreciation of the home value, right?
Exactly.
And then there's like another bucket, right? So there's like what you do in your IRA, that's pre-tax, whatever. If your employer doesn't allow you to put that in real estate, cool. But then there's a whole nother bucket of, that you are investing outside of just your own, you get a bonus and,
right,
different things, or you hit sales quota, or you're dutifully putting this stuff away. Those people are, maybe some of it's dividend stock, but like you said, like they're betting on appreciation too. They are there for the appreciation of it, not the short-term cash flow, not the whatever. And they're not there for like appreciation because it's always going to appreciate. They're there for appreciation that drops 20% and then goes up 15% and then drops 5 and then goes up 20 and then whatever. And they're hoping, they're like, well, in time, it's going to be like 8 to 9%, right? Like that's what people are betting for.
Yeah, but what does that mean? They're saying like over a cycle, it's gonna work out, which is exactly what I preach here for rental property investing.
Yeah.
Over a cycle, it's gonna work out, except when I say work out, it's better returns and lower volatility. It's better returns and lower risk, right?
Is there anything to the fact that you're spoiled because you run a world-class property management company, so it is lower risk? Like you just mentioned the asset class in general, right? How much does it have to do with like the fact that you as a company have really figured out the asset class as a management experience?
That's a good point. It has everything to do with that. So when I'm on my soapbox here ranting and raving, I am assuming that you have found a company like JWB. Because if you are investing in rental properties on your own, then I don't think that this applies. There is more risk to do that. And you might not make it the full 10 years or 20 years of owning that rental property to see all 5 profit centers. And you might not be helped along the way to understand how to use smart debt to your advantage. So it's a really good point, and I should probably qualify that. That is when you're working with a vertically integrated company like JWB, who has nailed down property management. That is absolutely true.
Yeah. So then that's why people do it. People run from it because they haven't identified a good operator. They haven't been educated that the key to success is an operator, and they haven't been educated on the idea that you find an operator by seeing somebody that is an investor who is investing right next to you, is thinking long-term, is planning for long-term leases, reducing turnover, as opposed to making money from the property management company, maximizing profit from property management as much as maximizing return.
Yeah, no, you said it well.